So another huge announcement that was made recently was Evernorth. They're doing a SPAC on AACI. A lot of people are anticipating a big move in that stock and buying it now. I don't know. We'll see what happens with that. They have injected, I think it's 261 million XRP into the wallet that's going to be used for the SPAC. Arrington Capital, along with SBI, Chris Larson, Uphold, and many others have put a portion of XRP into that company. We'll see what happens at Digital Wealth Partners. Excited for them to. The whole point of that company is a couple things. One, institutional exposure to XRP. There's no ETFs live yet, but there will be. And that's a DAT. So it's a digital asset treasury company. The benefit that you're going to get from a DAT versus an ETF is their ETFs are really restrictive on how they're able to generate returns on the asset. So it needs to be some native staking functionality for the asset where they're able to generate returns and pay a dividend. ETH can do that, right? Bitcoin, not really. There's nothing you can do. XRP right now doesn't have any smart contract functionality on the mainnet. So it's just trading one-to-one to the asset based on the ratio of shares versus the underlying XRP for the ETFs. The DAT is interesting. It can trade above the NAV or the net asset value. So you're going to look at MNAV or the multiple of the net asset value. And traditionally, if you've looked at MicroStrategy and some of the other DATs that are out there, they've done both. They've traded below the NAV and they've traded above the NAV. If you do it right and you're aggressively acquiring more XRP or whatever the asset is inside the asset treasury company, then a dollar there is going to be more effective than you buying a dollar's worth of the asset because they're going to be able to aggregate more faster because they're able to take leverage and loans and do things. And so they'll trade above the NAV on the asset, and they may pay a dividend because you're going to be able to do a lot more things with the assets in a treasury company than you would in an ETF.